Hi traders, so in today's video, and actually in this series that I start, I want to talk about if you can actually trade with a $100 account. In this case it is 100 euros, but the difference is not that huge. It is just a couple dollars more than if it would be $100, so it's approximately the same. Now in this video series I start a live 100 euro account with 1 to 30 leverage and with a standard account. So I wanted to build this video series around live trading, and if it is possible to actually be profitable with a $100 account. And the question is not that easy, it is not that simple, because most traders actually think, so half of the, basically it is not that simple, because half of the traders think that it is absolutely possible and you can make tens of thousands of dollars from that $100. And the other half of the traders think that is absolutely bullshit, and $100 is not enough to actually trade with robots or even manually. It is not enough to actually trade. And of course it is not easy, but it is possible. Now for this challenge to be even more difficult for me and exciting, I added some more interesting stuff to it, and that is in this challenge I will day trade. And I don't day trade, and I don't like day trading. I kind of hate day trading because I am more of a long-term trader, swing trader. I hold positions from a few days to even a couple of months if it is the market situation. So I didn't really day trade at all. And in this series I will day trade, and I will try out if it is possible to grow a small $100 account with day trading. Now of course I decided this not just to be more exciting for me, but because most traders who want to trade with this small amount of money, they are day traders or scalpers, but we won't scalp on this channel. So day trading is of course a legit form of trading, but it is really hard, and it is much more unpredictable than long-term trading, and it will be quite interesting. Now I will tell you, in my opinion, what are the most important things when you try to build up a small account, and what will be the rules that I will follow when I am trading with this small amount. I want this to be an ultimate test with real set of rules and money management, if it's possible to trade with a $1 account, or it is not possible because it's just too small and the fluctuation of the markets will just wash the account away. And let's see. So now I will tell you all the details, what are my favorite, what are the, in my opinion, the most important rules that you should follow when you are trading with a small account and you want to build it up. I want to add one more thing to this, that is, don't be discouraged when you are trading with a small account, because you are learning, and actually if you make like 5% gain on that account, it won't be too much. It will be, $5. But imagine you just have to, because trading is completely linear, so you can just imagine if you trade with the exactly same system, for example for a prop trading firm with $100,000, how much would be that 5%? And that is a different thing. And it is the same if you trade with a $1 or $100,000 account. If you do the right things, if you do money management right, the maximum drawdown right, and the maximum number of trades, the strategy and everything. So don't be discouraged, because if you are experiment trading with a small account, you will be prepared for trading, because trading with a small account is really a stress test too for the entire system, because even with a 0.01 lot size, it is kind of too big for a 100 account. So it is kind of a stress test, because you will trade with too high amount, even if you are trading with the lowest amount. The first rule is that I already mentioned. It is not a technical one, it's a fundamental one, a psychological one. Don't be greedy. With $100, your goal shouldn't be to get rich or to make money. Your goal should be to grow the account and learn trading, because if you learn the skills, after that you can apply to a prop firm with your track record, or apply to a prop firm challenge, or if some investors come to you, you can trade for them, or you can gather enough money to trade with a bigger account for yourself. So you will have this, you build the skill set with a smaller amount. You don't build the money for your house or your car. It is not the goal. With a small account, you build a skill set. The second thing is to be very, very consistent. If you are not consistent enough, you won't be profitable with a small account. Of course, you wouldn't be profitable with a bigger account as well, but with a bigger account, you have more flexibility, because even if you lose a couple of dollars, you will still have money. But with a small account, if you don't want to blow it, be very, very consistent. And if you establish the rules of your strategy, don't break the rules. Don't break your own rules for that strategy, because if you do that, it will just lead to account blowing over and over again. And why would it be good for you, your health, and your entire approach towards trading will be much different if you blew a few accounts, and it is not healthy. So be consistent and be a real trader, not a gambler. The third thing is, and it will be very tough because you are trading with a small account, don't move your stop loss ever, period. If the market goes in the opposite direction and you think that, man, there is a support, there is a resistance, and I have to move my stop loss because it won't go that far and it will go backwards, and then I will make money and I won't lose, and it will be good. And no, never do that. Never move your stop loss. If you know that you are a stop loss mover, establish a system where you have a, of course, good risk to reward ratio. So your take profit is at least the same as your stop loss, so 1-to-1 risk to reward ratio. Of course, the recommended is like 1-to-2 somewhere, but 1-to-1 is good enough for a beginner, because I see that beginners use like insanely bad risk to reward ratios, and 1-to-1 is like a miracle. So at least use 1-to-1 risk to reward ratio. But if you know that you're a stop loss mover, then don't use tight stop losses. Don't use those tiny stop losses, because then you will move that. And if you move your stop loss, you will, based on psychology, you will create a bad chain of habits. You will develop bad habits in your trading at the beginning, and that causes so much trouble in the future. So, but of course, I have to add, if you use huge stop loss, you have to use huge take profit, and don't move your take profit and don't close the trades sooner than it is actually the take profit's price. Don't do that, because that is just as harmful as moving your stop loss. And I know that most of you did that. It is okay, but get rid of that, because it is, in my opinion, the deadliest or one of the deadliest habits of a beginner trader. The next thing is that you should always set your rules before you trade. Don't ever set your rules after you started to trade, because if you do that, it means that you modify your existing rules, and if you don't have rules, then don't even start to trade. It is a paradox. So before you start to trade, write it down on a paper. I do this all the time, and I calculate the risk rewards, the probability theory of the entire strategy that I use. I calculate everything. So do that, because you can't just gambling around. That is not healthy. And set, for example, I want to help you set the hours that you trade in a day, because I see that most beginners, especially beginners, trade too much hours of a day. They don't really have a time that they take off from trading and just be without trading. They always trade, and over trading leads to loss. It is just how the cycle works. If you don't establish healthy rules for trading, you will eventually fail, even if at the beginning you are doing great. So it is not that easy, even for me, because trading is very addictive. But you have to set these rules, and you have to force these rules, because no one will do it, and you should do it for yourself if you want to be profitable. I would recommend to establish rules how many trades you can carry at once, at a maximum, and the risk to reward ratios are of course very important to set before you start to trade, and write it down in a journal, because you have to take a look at it and see that you can't break that rule, because otherwise you will fail. So the fifth rule is just quiet, interesting, and I never heard that anyone would say it, and it is that monitor your account with an outside on an outside website. So monitor your account, for example, on MQL5, MYFXBOOK, or FXBLUE, or any kind of website where you can monitor your trades, your statistics, your overall performance, your ratios. And it is not important just because of those statistics, but it is important because of your psychology. Because if you take a look at an outside website outside of MT4, MT5, or anything, the broker's platform, you can take a look at your trades and your statistics, and it will be much clearer that you see, because when you are stuck in that room with that MT4 and with your trades, you don't see clearly. And if you take a look at another website where your trades are monitored, you will have a much higher chance to understand your failures, your mistakes, and improve them. So let's do it. The sixth thing is that keep your leverage down. It is really, really important. So please do that. Keep your leverage at maximum 1 to 50. And if you are using like 1 to 100, 1 to 200, 1 to thousands of leverages, expect failure. Because, for example, if you are trading with a 1 to 100 account, and I use 1 to 30 leverage, I can open 3 trades at one time, because that is the amount of leverage in the account, and that is great. I can open these 3 trades with the smallest 0.01 lot. And if you are trading with a very high leverage, it will give you false understanding of how money works in the markets. it will give you understanding that is not the truth behind the trades and the markets, and it gives you too much buying power. It is not a coincidence that the best prop trading platforms only give you like not even 1 to 30, like 1 to 3 leverage, and 1 to 5 and 1 to 10. It is not a coincidence, because they don't want to lose their precious money because you fail. A good leverage that is not too high will give you self-discipline that is so much, and patience that is needed for forex trading. These were my top tips for this, and I hope you enjoyed this video very much. So here is MQL5. I monitor my trades on MQL5, and it is as you see, a live account. It is an account where the $100 account and all the trades that I do on this account are shown. Now, I don't know what will be the result of the challenge, but I'm really excited because it will be an interesting challenge for me and for you. I haven't tried to trade with $100 in the past. I haven't day traded, and it will be interesting because I do it completely from the beginning with a good set of strategy rules that I use, that is based on price action, and a good money management system that uses a minimum 1-to-1, the 1-to-2 risk to reward ratio. I set the trading hours for myself, the currency pairs and everything, to make sure that I do my best to grow this small account. So let's take a look at it, and yeah, I will make more videos along the way, and I hope this will be interesting for you all. If you like this kind of content, subscribe to the channel.